Apple doesn't make memory, and it doesn't build AI data centers. But the thing that squeezed it most this quarter is exactly the memory everyone else is grabbing to build those AI data centers. On paper, the quarter was excellent. Revenue was $109.4 billion, up 16% year over year, Apple's strongest June quarter ever. iPhone was up 22%, Mac up 29%, and Greater China up 22% to an all-time record. Diluted earnings per share was $2.02, up 29%. There was a tariff refund in there that lifted gross margin by about 2 points and added 11 cents to earnings per share. But Apple made a point of saying that even without the tariff refund, revenue, gross margin, and earnings per share all still set June quarter records. That is different from a paper gain like Amazon's Anthropic markup. Apple's underlying quarter was genuinely strong. And yet, after the report, the stock fell about 10%. A record quarter, and the market sold it. There were two obvious reasons. One, services revenue grew 12%, a bit below Apple's own guidance. Two, the guidance for next quarter was soft. Total revenue is guided to grow just 9 to 11%, and gross margin is cut from 50.1% down to 47 to 48%. But the more serious issue was one word the analysts kept coming back to: memory. One analyst put it bluntly: memory inflation is challenging your whole equation, and there are reports you are looking for more memory suppliers. Apple's answer was candid. They said, "We paid more for memory in the March quarter than in December, and for September, we expect to pay even higher memory prices." And they added something heavier beyond September. Market memory prices keep rising, and that could have a growing impact on our business. They also pointed at the real problem. The DRAM memory market has only 3 suppliers. More suppliers would help our supply, and maybe our pricing. Those 3 are Samsung, SK Hynix, and Micron. So why is memory suddenly this scarce and this expensive? Because the world's tech giants are spending over $700 billion on AI this year building data centers. Those data centers need enormous amounts of high bandwidth memory, which eats up the memory factory's capacity and pushes prices up. Amazon's Andy Jassy and Samsung's own results both put this price surge squarely on AI, which creates a very awkward position for Apple. Apple doesn't build data centers, doesn't sell AI compute, and doesn't train AI models. It earns none of the money on the AI infrastructure side. That all goes to Amazon, Microsoft, Nvidia, Samsung, and Micron. But it is a huge buyer of memory. Every iPhone, Mac, and iPad is full of it. Other people drove memory prices up to build AI, and the bill lands on Apple. And it gets more awkward. Apple's entire AI strategy is on device. Siri AI and Apple Intelligence run on your phone and your computer, not in the cloud. That means every iPhone and every Mac has to pack in more memory for the models to run. So the harder Apple pushes into AI, the more memory it has to buy. And memory is at its most expensive and most scarce, precisely because everyone else is building AI data centers. The demand side and the cost side are pressing up at the same time. For Apple right now, AI is not a business. It is a cost. On the call, someone asked how Apple plans to recover the compute cost of on-device AI, whether it will charge through iCloud+. Apple isn't standing still. It just announced a partnership with Broadcom to design its own silicon and build an end-to-end silicon supply chain in the US. But that addresses compute chips. It does not fix the fact that DRAM is controlled by 3 suppliers. Apple Silicon uses unified memory, but the memory itself still has to be bought from those 3. So to be clear, Apple did not fall apart this quarter. On paper, it is stronger than anyone. This is a structural, forward-looking problem, not a collapse today. But it was already forced to cut its gross margin guidance for next quarter. And on this very call, Tim Cook said this would be his final earnings call. Going forward, John will lead these calls. He is handing the company to John Ternus. Cook said the transition is going seamlessly, and there is no better person to take the helm of Apple. In other words, in his farewell quarter, Cook set one of the hardest problems of the AI era down on his successor's desk. A company that doesn't build AI infrastructure is paying for everyone else's AI infrastructure. And its own on-device AI only makes that bill bigger. 3 things to watch from here. Whether September gross margin breaks below that 47 to 48% floor, how high memory prices climb next year, and whether the all-new Siri AI can turn from a cost into a real business. Those answers won't be coming from Tim Cook anymore.